Hi, and welcome to Financial Solutions. I'm your host, Mark Rigney. On today's show, we're going to give struggling homeowners information on steps to take when facing a crisis with their home. Whether you or someone you know is underwater, attempting to do a loan modification, or facing foreclosure, you need to be aware of your options and rights and who to seek for qualified advice. Homeowners need to take an active role to find help locally and through the government to avoid a home crisis. In our studio today, we have Ingrid Beckles. Mrs. Beckles is a former senior executive at Freddie Mac. Mrs. Beckles is also the founder of the Beckles Collective, LLC, which is a firm specializing in mortgage banking, housing policy, and real estate management. Hi, Ingrid, and thanks for being here. We're excited to have you.
Thanks for having me, Mark.
Why don't you share with our viewers a little bit about your professional background?
I started in banking retail side in 1981 and moved into the mortgage space in 1985 when we had the first savings and loan crisis, or actually it was great because it was deregulation and big refi boom, and I was an auditor at the time, so I had to develop the audit program, and then I moved into mortgages directly, leading the departments that I'd started, went to PNC Mortgage, ultimately became the head of credit policy for PNC Mortgage, left there in 2001 and joined Freddie Mac, and spent 8.5 years having quite the adventure at Freddie Mac, mostly in the default management space, looking at how to help distressed borrowers keep their homes, making sure they were educated about what their options were, understanding foreclosures, working with the servicers, and then managing the REO when we couldn't keep someone in their home, making sure that we put clean, affordable housing out there.
You were there when all the top headlines of all the news, huh?
Absolutely.
Well, let's start from the beginning. What would you recommend our viewers do if they cannot pay for their mortgage? What's the very first step?
The first step is to call your servicer. Your servicer is the ultimate decision maker. And the servicer is the person to whom you send your mortgage every month. So wherever you're making your payments every month, that's your servicer. There's usually an 800 number, some kind of a toll-free number. The servicer is equipped with all of the programs necessary to help you. So regardless of who owns your note, because the servicer does just that, they facilitate servicing on the note. They collect payments. They work through taxes if you're escrowed. They pay your mortgage insurance or your hazard insurance. So they're called the servicer. They get paid a fee by the person who owns a note, who is the investor. So regardless of who your investor is, most of even the private label investors, as well as the government sponsored entities, Fannie Mae, Freddie Mac, Ginnie Mae, even for the FHA loans, Veterans Administration loans, they have programs to help people avoid foreclosure. So they are the absolute people that you should get in touch with because they have all of those programs. They have government programs and they have their own proprietary programs, and they should be able to find something to help you if you're able to stay in your home.
A lot of people, I imagine, would want to do nothing. You know, they're probably ashamed they can't make their mortgage payment. So would you say the worst thing to do would be to do nothing, not call the servicer?
Absolutely. Do not call your servicer. Doing nothing is the worst thing that can happen because you can find yourself in foreclosure and not having had an opportunity to talk or taken the opportunity to talk to the person who can make the decision and evaluate you for all of the programs that are available to you. And anything is better than a foreclosure because a foreclosure stays on your credit report for 7 years. It is a big hit. It does not allow you to get favorable terms on your mortgages or any other financing in the future, and it also doesn't allow you to obtain a new mortgage for a period of years once you've had a foreclosure, especially on your primary residence. So anything but a foreclosure that you can work out, like a repayment plan if it's a temporary situation, or a modification if you need complete restructuring, or a short sale if you have determined that you can no longer afford to be a homeowner. Some people just can't keep up with the ancillary costs of home ownership. So there's so many things that are available to you, so you must call. Don't do nothing.
Yeah. You have a tendency to be ashamed if you can't make your mortgage payment. The last person you want to tell would be the servicer, the people you make the payment to. You're saying no, call them, make them aware of the situation from the beginning.
Because they really are there to help.
What is the process, or what type of help can a buyer or homeowner expect to get from their servicer?
Okay, so there's several types of help. If you are employed but have had a reduction in your income, or if you lost a job but were re-employed in a lower income situation, you can seek a modification, and that's provided that you want to stay in your home. So if you want to retain your home, you can seek a modification. You've got the Home Affordable Modification Program, which is called HAMP. You've got the Home Affordable Refinance Program, which is for borrowers who have not been late on their payment, and it streamlines the process to get an interest rate reduction mortgage from your current servicer. And those are all under the government's Making Home Affordable programs. And in addition to that, the servicers all have their proprietary modifications, repayment plans, short sale programs, and things like that. If you choose not to retain your home, if you just decided that home ownership is not for you anymore, you can seek qualification under a short sale program. The government's Making Home Affordable program has the Home Affordable Foreclosure or Alternative, which is a short sale program, or you can seek relief in a short sale under the proprietary programs that the servicer can offer, and they offer these programs on behalf of their investors. So if your loan is with Fannie Mae or Freddie Mac, you have to go through the Home Affordable Modification or Home Affordable Refinance qualification process first. Then you can be considered for their traditional programs.
What happens in the event that the house is not worth the mortgage, meaning that you're underwater $50,000 or so, significantly underwater? What are the options then that you would recommend?
Well, if you are a current borrower, meaning that you have not had any 30-day delinquents in the past 12 months, and your home is underwater, we don't want you to have to become defaulted on the mortgage before you get help. The Home Affordable Refinance Program allows you to refinance your mortgage up to 125% of the current value. So if your house is worth $100,000 today, you can get a mortgage that's valued at $125,000 to help with those deficiencies in the values, since everybody has suffered declines in property values, or most people have, throughout this housing crisis.
Now, to get that loan, do they have to go through their same servicer, or can they apply to servicers outside who your current lender is?
Well, you have to get that program from a servicer that offers the Home Affordable Refinance Program. Now, your servicer may also have a proprietary refinance program that allows you to go above the current value of the house, but for the Making Home Affordable Refinance programs, you have, with Freddie Mac, you have two options. You have same servicer, you're going to go through your same servicer. And that is a very streamlined program in that they do all of the valuations there for you.
Do you think it's easier? Sorry, do you think it's easier to go through your same servicer?
Oh, absolutely. It usually is easier to go through your same servicer because they have all of your information and all of your history, and they already have, they're servicing the mortgage for you. And it makes the process go a lot smoother for you. And then they can look at all of the options depending on who your investor is. So if you go through your same servicer, you might get a much more expedited process, and you can get relief a lot sooner. And you can also go through another servicer if you're shopping around for a refinance and look for those opportunities. Should
the borrowers be weary of servicer? I mean, are they there to provide help, or are they there to take your home?
The servicers are there to provide help. They really are. It is not beneficial for servicers to take the homes back because they have to work on the best interests of the investors. As many people know, when a home goes into a foreclosure and then a bank-owned or real estate-owned called REO state, there's a valuation haircut that comes from the stigma of having been a foreclosed property. It's usually about 25%. And then you have all the costs associated to the bank with holding on to that property while they try to dispose of it. So if you look at present values of dollars and things like that, selling it at today's dollar value versus going through all of that subsequent deterioration in value while they're trying to market and sell the home, the short sale works better in most cases for the investor. And so the servicer doesn't want to take your home from you. They want to help you work through it, either by keeping you in it if you can, or helping you have a graceful exit through a short sale versus having a foreclosure.
Why are these servicers, you hear in the news all the time, I applied for my loan modification, I provided the documents, 2 months later they come back, we lost your documents, please provide them again. What happens in that case? Do you know?
Yes, well, servicing was really built to collect and pass through payments to the people who own the mortgages, the notes, the investor. And as you recall, in the early 2000s, our delinquency rate in the United States was very, 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 very low. So the demand for default servicing was not a top demand within or competency within the servicer shops.
Right.
So not only do we have a massive housing crisis coupled by prolonged unemployment, so where people used to be able to get repayment plans and just take a little break and then pick it up later, now you're into this big modification and underwrite program. And then on top of that, the Making Home Affordable program requires a pretty substantial amount of documentation. So you are now introducing documentation into a shop that was equipped and refined and fine-tuned over the years to collect and pass payments to investors in almost a paperless fashion. Now you have paper. So they had to do some retooling. I believe they're in pretty good shape now. They have imaging, they have processes, the Attorney General settlement requiring single point of contact, very important, because just like when you're getting a house, you usually only talk to one person, your loan officer, maybe your processor, but you don't talk to everybody along the continuum of the process. And default servicing, I believe, is moving in that direction. So that'll help a lot.
So when the housing crash occurred, the big companies just weren't prepared for all the paperwork to come in to do these loan modifications.
Well, I would say that they weren't structured for it because that's not what servicing was intended to do at these volumes. And then most of the time when you would get a modification to be considered, it would be in the later stages of delinquency. In the later stages of delinquency, you always traditionally had far fewer loans to deal with. But the Making Home Affordable program requires solicitation early in the process to let borrowers know they can get help well before they get really significantly delinquent. So you've got the 30s and the 60s and all of that getting notices. That's a big population as opposed to the 90s, which is smaller at 120, which is every step of the way, either people cure or sell or something, so it gets smaller further out. So the volume, the paper, and the structure that was made to paperlessly pass money through to investors kind of cause a challenge.
You mentioned delinquency. Is it necessary that a homeowner become delinquent before they actually take some type of action, or if they see their hard times are coming down the road, they're going through a divorce, or they're going to be laid off, should they take action at that point, or is it necessary that they actually become delinquent first?
No, I remember when the president made the announcement in February of 2009, one of the things that he did say to the United States public was that he doesn't want to encourage people to become delinquent with these programs. So he was advising the American public that the programs that were going to be built would provide for folks who were current on their mortgage but facing some kind of imminent default danger. So the Making Home Affordable programs, such as the refinance program, allows you to do the streamlined refinance when you're current. You can't be late on your mortgage. And then the Making Home Affordable program also allows you to be current on your mortgage at the time that you apply for consideration, but you must meet an imminent default test. So the three considerations for imminent default are death of the borrower or co-borrower, long-term disability, and divorce. And then there's, in the guides and online, you can find the documentation requirements on the treasury.gov, on FreddieMac.com, FannieMae.com. Hope for Homeowners is another place to go and look to get that kind of information.
You mentioned short sale earlier. Why don't you share with our viewers exactly what a short sale is?
Sure. A short sale is a process whereby you sell the home